Hey traders, Raghee here, and in this recap video we got to talk about NAFTA and what seems to be the reemergence of what is not NAFTA but NAFTA. It's going to be this basically Mexico-US agreement, and it's going to impact a number of sectors, and I want to start off with what some of those sectors are. Autos were a huge part of this. So there is a very illiquid ETF that's kind of interesting, and you see CARZ, C-A-R-Z, heading higher on this NAFTA news. There's also some interesting moves in GM happening right now. And again, if you take a look at some of the NAFTA details, which are still very fuzzy, and this is far, far from a done deal, which you can tell this market, by the way, once it had a chance to sort of digest NAFTA. Take a look at these 5-minute charts, all of which include the 11 o'clock cutoff when we kind of officially got the news. The Russell turned around and headed south after that. Why did that happen? It was really because the Russell is the one segment of this market that didn't really need NAFTA to happen to continue higher. In fact, some of the reason a lot of traders and investors were hiding out in small cap was because US dollar strength and a trade war narrative historically allows the Russell to outperform the S&P. So news that 1 out of 3 of the trade issues we've got, and I say 3, China, Canada, and Mexico, 1 out of 3 is solved. There's less reason for the Russell to have to be a place to hide out. In fact, we've seen the Dow really emerge, not just today, but generally speaking, as the best looking of the index futures when you look on the daily time frame. Okay, so one of the things you're going to see me do when there is a broad story hitting the market is, number one, understand what it's going to impact. We saw the peso head higher, number one strength story in the currency world today. Taking a look at GM, taking a look at CARZ, C-A-R-Z. These, and then of course GM has some weighting in the XLY, and I'll also keep an eye on the IYK. These are ETFs that are going to be in play with GM. Now, if you're ever curious what kind of impact you're seeing, you really want to think about the heavily weighted sectors and the stocks within them. So it's a little bit of reverse engineering why something could be moving and what stocks are inside these different index futures and ETFs. And this is something we talk about, the connected nature of the market, where a NAFTA narrative could have us looking as easily as to peso futures and GM. I mean, it's a similar catalyst affecting multiple markets. One really interesting thing we saw today is the weakness in the dollar. Now, I do not suspect that the dollar is going to cease being a safe haven. The question is, do we still need one? There is a long way to go until we see the US, Canada, and Mexico in an official agreement. So I'm not thinking that this is going to be something that I'm just going to assume is a done deal. That would be a mistake. And that would also mean it's a mistake to think that just because we have the first red grab candle on the dollar index since April, that this is somehow going to just about face and turn into a downtrend. Remember, we do not have a clear path to rate hikes from the ECB at all. And we do have a very clear path to rate hikes, although they may now, the market's now perceiving that the FOMC, that they may now be a little bit more accommodative. All that means, by the way, is that the FOMC is willing to say we are not on a direct agenda of 6 rate hikes between September of 2018 and December of 2019. So that means they're willing to maybe flex a little bit. That could be, instead of 6 hikes, 4 hikes, 3 hikes. I don't suspect there'll be less than 3. So that's another reason for dollar bears from an FOMC standpoint to be as bullish. But as long as emerging markets are still, for the most part, still very weak, and today's gap up is just a gap up on the news from NAFTA, I think this is still a very heavy market. There are plenty of other currencies that are still in big trouble. I think the demand for the dollar is not going to stop. Remember, when a trend breaks, and today was a trend break, don't get me wrong, I'm not making light of this candle, but a trend break of an uptrend on a daily time frame does not become a short. it becomes a reason to start looking for oversold buys. Probably the best way to do this is going to be a very interesting little near-term 5-minute squeeze that's forming on the Euro US today. Look at that sideways action. And potentially the short in gold that we have approximately $1 from where we are right now. Right up into the wave. Very nice correction, very nice bounce. And this creates kind of an exhaustion correction short. Okay? So that's what we've got going on. A lot of movement that was created by NAFTA. We'll continue to monitor this particular narrative the rest of the week, see what other kind of trades are setting up. But always think about when there's a catalyst, when there's a narrative hitting the market, where is it going to land? Where are those interconnected setups? This is just a handful of them. I'll see you in the next update.